Hello, I've returned with another ADH Wealth solution. Today, we will begin to discuss fulfilling all of your financial needs. As always, this is a basic description. For an evaluation of your own, please schedule an appointment. My information is in the description. Lastly, make sure you hit the like, drop a comment, and if you're new, subscribe and hit the notification bell so you're made aware every time I release new content.
It's something to think about. I would be curious to know what your manosphere people have to say or think about that, because typically we're on two totally opposite sides of the spectrum when we're going to have these conversations.
Obviously, we don't want to go deep into investments or really specific into any product. Or did you want to do things like disability?
Well, I think there's room to discuss it. It's really one of those products that I think people overlook, and it's actually pretty beneficial from what I learned for like the life versus the mortgage, because I guess people would try to justify having one over the other, possibly. But, I mean, my only argument there is that the house you live in isn't going to ever make you rich unless you sell it.
More valuable than the $250,000 house, if it's a single family home.
I mean, yeah, I would agree with that, and it's cheaper. Like, what's the mortgage on a $250,000 house, like $1,000 and something, depending on where you're at. Whereas a $250,000 life insurance term policy is probably $20-$30. But I would even argue having term insurance is better than having a mortgage, because if something happens to you, who's going to be able to pay for that mortgage?
Which is better than a term policy.
Okay. So, like, what would be what's the point to that? Like, why do you feel like a mortgage is better than a term policy?
Because you get something out of it where you get nothing from a term policy.
For, like, guaranteed insurability, and then you can eventually switch over, but...
Well, yes, you do have guaranteed insurability. And guaranteed insurability is a limited thing on a term policy. What is it, the max on a 20 years?
They're usually 10 years, depending on the product. But like for 20-year products, I know you have a 10-year conversion period to switch over to like whole life or something like that. But like your guaranteed insurability lasts as long as that policy is active, from my understanding. I don't know. I just feel like having life insurance is cheap, and what's more valuable than your house? Like, over your lifetime, what do we average? Like, the average person can make like $2 million, and you have a $250,000 house. I just feel like having life insurance is cheaper, and it's more valuable, even if it's not guaranteed. I still think it's better to protect yourself than to pay for something that you may be more likely not to ever pay off in your life.
So would you say get a 30-year term with over getting a house?
I mean, honestly, you could do both, because term insurance is so cheap. But if really, like, bottom line, if you had this $30 and it determined whether you qualify for the home or not, it's time to reevaluate stuff anyway, right?
Yeah.
Like, can you really afford a mortgage on a home in the first place if $30 is going to make or break you? So I sell over anything else because I'm my most valuable asset. Nothing that I own is ever going to produce the amount of money that I produce. That's not my investment portfolio. That's not a rental property, because I'm the one that went out and made those things happen. So if I'm not insuring me and what I can produce, like, what's the point?
Yeah, but I mean, at least here's the thing, when we're talking especially about generational wealth, with a house and a mortgage, even if you leave it to, like, let's say you leave it to somebody else, they can take over the payments, and then when you do pay that house off, because some people do pay the house off, then, it's in the family for the rest of the life, until somebody sells it.
Right.
I mean, as long as they, pay the taxes and keep it up.
Right. So that was going to be my next question. Are we making it an assumption that a person dies with no life insurance, that the individual can, one, actually stay in the home without that second income, and two, that their children are going to be in a financial situation to where they can pay the taxes along with take care of whatever they got going on in their day-to-day lives?
I mean, let's see, in that situation, they can, if it's a single family, you can still rent it out, right?
You absolutely could.
And renting it out, you can earn the income from it.
Right. Let's have a conversation around that, because that's a really good point. So you have an individual who passes away with no life insurance, right? But they have this mortgage. Well, then the child or the spouse decides to rent the property out. Cool. So one, where is that person going to find income to live somewhere else in the event that this is their only home, right? And then who's going to maintain this property? Are they going to go through like a company, which is always recommended because they deal with the tenants, they do the upkeep? And if that's the case, who's going to pay those fees to get that set up? Because you just buried somebody who's probably your source of income or a big chunk of it. So what's going to be there to supplement that? Like Social Security? Because we had to pay for it. So, I mean, it's a good idea, but you can't just go out and say, all right, this is going to be my rental property. Because there's so many pieces associated with that you don't have control over. There's a lot of hidden fees along with that as well. And then, does the house need any type of work? Is it going to be considered livable or rentable? Do you live in a desirable area? Like, there's a lot of unknowns. But one thing I can guarantee is this life insurance is going to pay out when you die.
Because there's always the argument of, like I said, when you don't die.
Right.
And with the term policy, if you don't die, then you don't get anything back. At least with a house, if you don't die, you eventually pay off the house.
Right, and you build equity. That is a valid point.
And you do build equity. So why wouldn't that be a better choice? Even though it's cheaper to buy the life insurance, I understand it's cheaper, but I don't get anything back.
So I don't know if your mom used to say this, but my mom always said this to me. There's only two things that I have to do in this life, and that is be black and die. That is it. What you're saying is like, all right, you can buy this house and you can build equity in this property, and the market is perfect and we're in a perfect world. So maybe I'm not upside down on this property. Because as you know, the housing market goes up and down like the stock market. And if this is your only asset and your end all be all, so you don't have life insurance, you only have this home, which is paid off or it's not paid off, you're putting a lot of stuff to chance. There's too many ifs associated with this, just having this property. Like, well, I could always take out a second mortgage on it, or I could always pull money out of the equity. Okay? So now you're talking about taking a loan against your only asset, your only source of income. You're now draining that piece of property for what it has to offer you. So if something does happen to you, because we know all you got to do in this life is be black and die, and you're going to do those two things no matter what. What happens to this property that you just pulled the equity out of? We don't know what type of housing market your kids are going to be left with, or even 5 years from now. Is it going to be valuable? How are you protecting yourself and your family from those type of unknowns?
Well, but the thing is, especially in markets like New York and California, things are always going to rent. So that's one positive.
Right.
But what you're saying is very true in terms of protecting. But again, at the end, like you said, the only thing I can see that a term policy is better than
mortgage protection is pretty much life insurance. We know that. It's just people who sell insurance market it as mortgage protection. People own so many different things, and individuals make money in so many different ways. But none of that could happen without that person. These people have the ideas, they produce the incomes, they set up the accounts, they have the conversation. So if all of that stops because something happened to you, it goes back to you're your greatest asset. Nothing is going to produce more money than you. So insure yourself. Treat yourself like a Ferrari.
Wow.
$250,000 house is nothing compared to the amount of money we would make in our lifetime.
And I told her about you too. So I was like, listen, this other young lady I'm working with, we were at the CAAFP, and she, Tiffany Alicia came up, and she had mentioned that 98% of her audience was African American female. And then I asked her if she had heard of her. She said yes. And then I was like, but me and my principal had no clue who she was.
Yeah.
But we immediately went to follow her.
So yeah, it was really cool. I liked the whole conference. My favorite part was definitely when the guys started talking about like the biases that are embedded into the computer systems just based off of natural human bias. It's just a new form of like redlining or boxing us out. But now we get to get discriminated against in the comfort of our own home instead of going to like a bank. So everything going on in our community where people are, out actively protesting what can we do from inside of our offices, or, what influence can we have on higher ups to pay attention to what's going on our cell phones and our laptops where we spend so much time on.
Yeah.
I used to doing, which is having conversations with people and getting them set up into the proper product.
For sure.
Yeah. Let me see if I can find it.
You said getting those conversations and getting in front of people and putting them in the proper products or proper positions is definitely the plan. You can use real estate, like I said, at this point, if you're holding it for 20 years, you've got 20 years worth of equity. So with that home, you can actually extract that equity and use that equity as 20% of the down payment to pay on another property that's an income-producing property. Using that income-producing property to actually pay off your first home.
Yeah, that's always a good move, definitely. But it just becomes another liability that you have to make sure that you properly insure and protect as well. Because with another rental property becomes more responsibilities, becomes a second mortgage, then you're responsible for the individuals that live in that house, the upkeep of that property. Like, all of these things can be potential lawsuits very quickly.
Okay.
So you have to insure yourself and get, contracts into place to protect yourself. The more things that you have in your name, the more of a risk it is. Like, anything that you have directly under your name that you own, you're responsible for it. If something goes good or bad, you're responsible for it. So, that's tax implications and everything else. So, I don't know, I think that's kind of exciting too, to think about. You have, just going off topic again, things, partnering with all these different groups and organizations. And he teaches a lot about financial education. I think that's the main piece when working in this industry, is because it's so heavily regulated that people on the outside don't necessarily know that, and they go online and they say certain things and they expose themselves to a lot of risk. I'm not licensed, so I can get on here and I can say whatever. I don't know which one is better. I don't know.
There's a lot of people who say stuff. Like, for example,
yeah, no, that's not how this works. Sure, if you wanted to, because I remember you mentioning right here. I remember you mentioning you wanted to set up like a hedge fund one day.
Yes.
Like having an attorney, like you can call and open a trust account, and as long as you send in the proper paperwork, boom, you have a trust. Yay! But the hard part is putting the proper information inside that trust and working with an attorney. Like that's not something somebody who's not licensed or who's not an attorney can do. Like I'm a licensed broker. I can't open you a trust. I can open the account, but that's it. Like I can't do anything as far as make this an actual trust. You need an estate attorney, somebody who is an actual attorney who went to school, who passed the bar, and who has credentials behind their name. Like somebody just saying I'm in wealth management with no credentials associated with what they're in should be a red flag for you. Like, you know, Series 7's licensing, 65, 63s, those are not easy things, and we are so heavily regulated on what we can do. It just makes a big difference than getting, you know, somebody who started day trading for 2 weeks and has two computer monitors, so now they feel like they're professional.
Ladies and gentlemen, if you're enjoying the content, make sure that you drop a like, comment, subscribe, and hit that notification bell so you're made aware every time I release new content. And as always, share. Lastly, if you'd like to contribute to the channel growth, my information is in the description. So
answer that, but this is a good way to reach me. You know, call Alonzo, we'll get together.
There we go. Yes, definitely. When you come through me, you can get to her because we have to make sure that you're even in a position to actually utilize what it is that she does.
That part.
Yeah. Because it's the thing. So, like you said, pulling the equity out and everything, there still is not that protection that life insurance affords you. And the reason I asked is which way. This is Alonzo Hall and Talani Granger, and this is the About That Life Insurance Finance podcast.
That's perfect. I'm totally okay with that.
Okay, well that's perfect.
I think that they have to have like this special class to invest in them. But if you have a brokerage account, you can look up REITs and put your money in it like any other investment, like a stock or a mutual fund. So I guess just making clarity around like how some investments are a lot simpler than people try to make them seem, and charge, you know, classes and stuff like that about get into this. Like, no, I mean, there's funds that people develop and that's great, but you don't have to go that route. Like if it has a ticker symbol, you can invest in it in your own portfolio by yourself and way less fees associated with it. So I don't know. I think that's like the only one thing I would want to talk about. We can definitely touch on like the actual definition of day trading as well, and then some of the restrictions associated with being a day trader, especially with some of the bigger brokerage firms like Schwab and Robinhood. You can't just willy-nilly trade and you only have $10,000. That's not how any of this works. They just want me to throw them in a product, and I said I don't operate like that. I'm not just gonna throw you into something you don't know shit about it, and you may or may not be able to afford it because you're just kind of pulling numbers out of your ass and telling me these things to make it impressive. Like, and get yourself protected. Like, it shouldn't be a pissing competition when it comes to the well-being of your family. Like, I see that a lot with men. Men have like these big egos and they want to talk about how much money they have and how well protected they are. Policies we're selling people, those don't make us rich. They're probably commissioned $200-$300 maybe. Or if you're doing term, it's more so about protecting your family, and it's because that's what it comes down to. I mean, eventually they'll begin to see it. Or, you know what? Jordans are an asset. They do go up in value. So your sneaker collection could actually potentially vary cheap. I did learn that. I've been learning a lot about sneakers. So, you know, I will count that as an investment now because I have seen some of them just really take off.
Well, no, I've seen people be like, yo, I'm going to save up to 9 months to buy this $5,000 pair of limited edition sneakers.
Right? But if that's like, you know, it's just like fine art, right? Like so your family can sell it and they can, if that money generated from that sale is going to protect what you've already put in place for your family, go for it. But if you can't afford $1 million policy, but you got $30, kind of weigh out your options. See what fits you best. That, you know, reach out, but you don't have to read my really helpful.
Okay. Well, anything I can do to be of help, I'll gladly.
Interested in having an evaluation? Find my contact info in the description and schedule a consult to explore your options. Have a financial question but don't know who to ask? Email me at a.hall@cgwealth.financial and your question may be answered in my next video. Security products are subject to investment risks, including possible loss of principal. Before investing, carefully consider the investment objectives, risks, limitations, charges, and expenses of the product and any underlying investment options. This information can be found in the product and investment option prospectuses. Copies are available from your registered representative.